George Evans, one of the founders of Convergence. And as you know, after almost 3 years, this is a monthly podcast where we feature just our clients and we discuss some of the top issues facing the industry today. I'm joined by a terrific guest today, Rob Mirsky of BDO. Probably many of you know Rob. Rob is co-head of the asset management practice. And Rob has just a fantastic pedigree, not only spending time with obviously BDO, but with Eisner and KPMG. And I know Rob for some time now, and Rob's also does quite a bit of philanthropic work in the industry, which I think is kind of impressive. So welcome, Rob. I'm really happy to have you today.
Thanks for having me on. Appreciate it.
Well, listen, why don't we let's start with just a little bit about you, right?
Sure.
I'll do you a disservice kind of just going through your background, but I'd love for you to tell, our audience a bit about your background, your pedigree,
Sure.
And we'll take it from there.
No, that's great. I love talking about myself. So I joined BDO a little over a year ago. Like you mentioned, I've been with a few other accounting firms in my career. I started life thinking I was going to be a lawyer, and after a brief stint practicing law, I decided international travel was the way for me to go, and joined an accounting firm. And they said, "Hey, you come in, and we'll send you on a secondment, we promise." And they did, and that sort of started my career down the path of international tax. And I've been really lucky to live all over the world, and across Europe and Asia, in the Caribbean, so tax is really, tax became kind of my thing. And about 20 years ago or something like that, I moved to the Cayman Islands. And as you and a lot of your listeners will be aware, Cayman is the home of hedge funds. And I moved down there thinking I was going to do insurance, and the managing partner of the firm said, "Why are you doing insurance? We do hedge funds here."
Yeah,
hedge funds, huh? Tell me about that. And that was it. And so I started down the path of alternative investments, hedge, and private equity. And it's been the same way ever since. I've been really focused on the asset management industry. To be honest, it's probably been over 20 years now. Forget how long it's been, but yeah, that's kind of my background. So like I said, I joined BDO about a year ago. I lead our asset management practice.
Yeah, well, listen, and let's talk a little bit about BDO, right? It's hard to believe. You may not know this, you may, but if you looked at SEC filings, believe it or not, there are 540 assurance firms named in SEC filings. Yes, so clearly probably the 80-20 or maybe even the 90-10 rule of where the alternative business is, right?
Mm-hmm.
But I know some people know BDO from lots of TV commercials in the last couple of years, right? And
people who know,
yeah. But if you give an overview of the firm, I think I think a lot of people know the big four in the industry, but clearly you guys are probably number 5, I'm going to guess, and certainly clearly a leader in the top 10 in the industry. But for our audience, I'd love for you to give an overview of the firm.
So BDO is, I think globally, we are the 5th largest accounting firm in the world. We are about, $13 billion in revenue globally, 120,000 people, 160 something countries. And so, we have a substantial presence throughout the world. Our largest firms are not unlike the big four in the US, in the UK, in Germany, sort of major markets like that. But obviously, in terms of what we do as a business, and in asset management, financial services, we're in all the major financial services centers as well. And again, our Irish firm is a really substantial firm. Our Cayman firm is a substantial firm, and and those are important parts of our practice too. And so, BDO has been in the asset management space forever. And in fact, asset management is one of, if not the fastest growing industries within the firm. It's something we've done really well for a very long time, even before I got here. And so my job is to help continue to grow the practice and help us thrive.
Yeah. And how do you guys talk a little bit about how you guys try to bring the firm right to
Sure.
say an alternative asset manager?
So, look, the call it the big four, the next sort of big group of accounting firms, all are more or less set up the same way in that, we all have assurance practices, tax practices, advisory practices. And I'm very lucky at BDO. We have a very focused industry group, again, which is this asset management group. And we look across all of alternatives and regulated product too.
Yeah.
And so, for us as a firm, and one of the things we've been really focused on over the last year is how we make sure we coordinate across the different service lines that we have, how we coordinate across the geographies. Again, given the size of the firm, it's also about making sure that we talk to each other across geographies, U.S. and U.K., et cetera. And so it's kind of trying to make sure that we can bring the best of BDO to our client base, and really drive good results.
Yeah, no, it's been impressive, because one of the things we monitor and we see, right, we do things like league tables and
Mm-hmm.
market share and competitive assessment, looking at
Mm-hmm.
kind of how the jockeying that goes on in the audit market for market share. Your
Yeah.
growth, clearly over the last 3 years has been fairly impressive, right?
Yeah, it's been great. And it's interesting too, because we should talk about the sort of the market, right, in asset management and alternatives and in regulated and US, domestic and global, and it's hard when you sort of look at that and see. And for us as a business, we historically have been really strong in the sort of small and middle market side of things, where we've spent a lot of time on, and have done extraordinarily well in building that out. And then over the last couple of years, we've sort of expanded as well into the bigger end of the market, and really across alternatives, private equity, hedge, have been really big areas for us. I think my West Coast colleagues would say I was remiss if I didn't also mention the strength of the venture practice,
Yeah.
that we have there as well. And so, so we've been growing across the market, whether it's, again, small, middle market, large, PE, hedge, venture, and really, and then again into this regulated business, where we're expanding into mutual funds as well, and offering all kinds of services in that market too.
Yeah, I mean, listen, there's only, I want to say a little bigger than a handful, but not everyone can go across, all types of asset types, right? SMAs, mutual
Yeah.
funds, alternatives, and more you kind of see that mix, right? In
Mm-hmm.
close to 20,000 SEC registered advisors now, right, worldwide,
Yeah.
in over 50 countries, right?
Well.
And that's just the SEC market, right? Not
Right.
the then you right have the big non-SEC market in Europe and Asia. Let's shift to
Yeah.
24, right? Where here we
Uh-huh.
are at the end of February, busy season, right?
Mm-hmm.
For
Mm-hmm.
your world, but love to hear about some of the top priorities for the firm in 24, Rob. Kind
Yeah.
of kind of what you're building off of that happened in 23, but really, if you took the practice, kind of where's the emphasis in 24?
So, look, I think for a lot of us, like you said, it's busy season, and busy season is rough across audit and tax, for everybody. And one of the things we've done as a firm over the last, over the last few years, is really make investment into technology that helps us better serve our clients, that helps us focus on doing what we can do best for them. It's I always say it's difficult when you talk to new clients. What they don't want to hear from an accounting firm is why you can tick and tie better than somebody else. Not that anybody ticks and ties anymore, but
Right.
you took the point, and that's not what's helpful. But how are you delivering? How are you providing value add? And so with our investment in technology, I think what we're finding is that there is real value add in what we can do with that. So, um, we can take, for example, we have a tax technology called Picasso, which I really think, having been in the market for a little while, and also worked with other large firms in building out their tax technology. Um, I think it really is best in class in providing something to the marketplace that is presenting value add, that allows them to dive down deep into numbers. And so, take for example this is going to get very exciting for people who aren't interested in tax, but let's just take the K1 process, the partnership return process, and those fund managers who are listening to this will know the pain often that they'll find from their investor base when they're trying to get answers to why did this number change, why is this like this, why did my K1 look like this, and trying to get a good answer to that, and what happened year over year, and all of those kinds of things. And what we've been building out is a really powerful engine that lets you go deep into understanding what happened, why it happened, when it happened. So not only are you you're better able to sort of, from an investor relations perspective, which we all know is so incredibly important in this space, not only are you better able to be responsive to your end clients, but you're able to get sort of interesting insights that
Right.
that may help drive change in terms of investment, and how and why you're doing things on a go forward basis. So I think that's incredibly powerful, and again, it's something that we've really been focused on and building out. So with 2024, I want to say it's a continuation, but it's a real big drive for us right now. Is sort of the change in technology. I think the other area that we've been very focused on, and again, this is a little bit newer since I joined. We have a global financial services business, right? And it's and I think I mentioned earlier, it's this coordination across the globe. It's really hard. I ran a Big Four business before, and so I know what it's like to try to coordinate cross border. It's really challenging at times. Some firms in some countries are better or worse than others. How do you make sure that you can really provide a good service to your clients here, and because ultimately they need to provide a good service to their end clients, the investor base, and so how do you do that? So we've been very focused, and will continue to focus, particularly over the course of this year, in developing that global network, in making sure that we are really well connected and coordinated in our approach to the marketplace. It's our client base, with the growth of our client base, it's really important that we have cross-border capabilities, that we can work, and sort of speak from the I think this is in English, right? Speak from the same hymn sheet, in I don't know if that's American or English anymore. We didn't talk about it. I spent a lot of time sort of cross-border between London and New York, and I start to forget. And so, that we can sort of speak about Japan in the same breath we can speak about Germany, in the same breath we can speak about, the US, and making sure that our Cayman colleagues are sort of really well involved in this to make sure that we're delivering really good. And that coordination, I can tell you, again, as somebody who's been in this business for a while, it's so hard to do properly.
Yeah,
And that's a big focus.
you bring up a really good point, because as when you think about some of your opening comments, right? The more upmarket you're going to go as a firm, the more important this
For the
discussion
cross-border stuff.
is, right? Because we've seen even in the last 3 years, kind of the distribution of new business, kind of below the top four is increasing, right?
Yeah.
To the top 10, and I think it's because of service models changing, global reach changing, right? And being able to kind of show people kind of that flawless kind of handoff, right?
Yeah.
Jurisdictions, right, is really important.
It is, and look, there are only a couple firms that can do it. I mean, I will say, even at sort of the startup, the new startup side of the market, this requirement, for example, to have a product that's appropriate for European investors. You can be a $25 million startup, and we work with plenty of startups, who are on the smaller side too. You're still going to want to know, wait, how do I raise money in Europe? Can I do that through a Cayman product? Does that make sense?
Right.
And so having those capabilities to say, sure, we can, you want to set something up with the Channel Islands, yeah, that makes sense. Yeah, we can do that in Jersey or Guernsey too, no problem. Luxembourg,
Right.
sure, no problem. And so even though you go to the very big, all of those big global publicly traded asset manager names that sure, they clearly they need us to be in every single country in the world. But even a startup manager needs us to, to be able to tell them, wait, okay, so what do I need when I'm going to start selling to Japanese investors? What do Middle East sovereigns care about, and how will they invest with us, and what's your experience with that? And so, so having that global experience is really important. So, like I said, that's a really big focus for us. This year is making sure that we're better coordinated. I sit on our global financial services board, and that's a big driver for us this year
Well,
too.
and I'll go back to your first point around technology, because we can relate to this, and that this
Yeah,
about
sure.
us, being able to provide color and insights on
Yeah,
data and a view of time series, and
right.
right, really is what distinguishes kind of a lot of firms in the marketplace today around data, right?
Yeah, look, what you guys do is great. It's not just scraping data from the SEC website. It's then
Right.
taking that and turning it into something that's really useful.
And
That's what,
actionable, right?
and
Actionable,
actionable. That's
right?
what's really important. That's what we care about is getting that kind of information from Convergence. Not, I can go to the SEC website. It might be more of a pain in the neck for me. But that's not what, but the stuff that you then provide on top, it's really important.
Yeah. So listen, let's move to uh, as we talk about 24. There's always kind of tailwinds and headwinds, right, in the
Mm-hmm.
market. So I'd like to get your perspective on both, and then I'm sure that'll move us into kind of a couple topics. So
Sure.
that I
Well,
want to talk about.
so there's some political instability, some global volatility happening right now, um, and so I guess the question is, is that good or bad for the industry? And look, I think let's take hedge funds for example, and this is just one part of the market. For hedge funds, that volatility is good,
Yeah.
and right, and so you should. I mean, I say that I'm overgeneralizing, but for the most part, what the tradition of hedge funds is to say, hey, look, we get that, and that's why you want an actively traded fund manager. That's why you want us, is because we can go through that and make
Yeah,
money for
listen,
you.
I have a next door neighbor that made a fortune trading the VIX, right?
Right? Yeah.
Love, right?
Yep.
So right,
So vol is good. And so for certain segments of the asset management space, some of this instability, the vol. I'm talking about instability as such. The instability, because it can be so chaotic, can be much more difficult than trading volatility, right? So there's instability and there's volatility. Volatility you can trade with. Instability is more
right.
difficult.
Yeah, that's a good point. Yep.
And so, but I think for hedge fund managers, I think there's a lot of opportunity here. Um, the interest rate environment being what it is, with the assumption things are going to, yeah, maybe we'll get a drop, in the Fed rate at some point soonish, but even still, this sort of era of higher interest rates, I don't think is a thing that's going away. Not that I'm the economist you necessarily want to go to, but
Right.
what that means is, there's opportunity for actively managed funds. In terms of private equity, though, with what's going on, there need to be more exits, and everybody keeps talking about exits out of private equity. And how do you find, how do you find that buyer? Look, we're seeing tremendous growth in secondaries funds. But I don't know if that's because there's opportunity or because there's nothing else to do.
Right.
But I think that I do think that there's opportunity. I think my overriding view is that the asset management business is just going to be booming. And this is because of more macro conditions with aging population, and growth in all areas of the business on the
Yeah, I
back
mean, you
of the
think about a simple topic like retail investment in alternatives.
right. I was going
Like
to talk about mutual funds.
alternative
Yeah,
investment becoming a standard part of a 401k plan, right?
absolutely.
That's a boom, right? That's
It
coming.
it is, and the money has to go somewhere. So it's either going under mattresses or it's going into the asset management space, and more
Yeah,
likely asset management.
yeah. What do you think? If I had to ask you, I think you're right about the difference between volatility and instability, right?
Right. Yeah.
Volatility certainly there's it can be very opportunistic.
Right.
What do you worry about, Rob? Like, what's the biggest thing you might worry about in 2024 for your business?
Um, yeah, that's a difficult one. I worry about that for my business and different things.
Yeah, no, BDO, yeah, BDO. Right?
Yeah,
I won't.
I'm not taking this question
Yeah,
for now. That's
we'll
it.
take that second piece offline. Yeah,
Yeah. um, so look, on the back of this, on the back of this growth, and what we're seeing is we're seeing more launches. Um, we're seeing more launches from existing fund managers, and I
yeah,
think it's becoming increasingly difficult because of tax, because of regulation, because of fundraising for new managers to get off the ground. I think that's a shame, because I think we need that. We need that investment coming from new managers. And when you look at the research, it's very often the new managers where you're getting the highest returns from. I think there's an economic term for it, which I can't remember right now, but something about sort of this new bias in essence, right?
yeah.
Where the new managers are taking bigger bets, and so they're more likely to have higher returns in the early years. But new managers really tough to get stuff off the ground. So we're seeing a bit of a slowdown in new launches across, in hedge and private equity and venture and across, real estate having a real tough time.
And I would say, Rob, historically, I'd say the last 3, 4 years, it was interesting because we saw that dynamic more on the hedge side, more
Yeah,
like a ton of new money coming in, but it was coming into existing hedge funds, right?
right.
Where all the growth was, we were seeing in new fund launches was
Yep.
closed end, right? Was it was
Mm-hmm.
PE, and obviously there's the boom in PE credit right now,
Yep.
right?
Yep.
Out but it's interesting point you bring up because that would move me to kind of maybe the discussion of outsourcing, right?
Right.
Because what
Mm-hmm.
that fund manager, so you go way back like me, right? So I can remember the initial like hedge fund in a box, right, where
Right. Sure.
something's set up,
Yep.
everything was set up for you. We even see now, there's fund administrators that are setting up um, kind of the regulatory schema already for a new launch, so that manager doesn't have to, they can tuck them in under as a sub fund under
Right.
an approved advisor that's gone through all the regulatory work already.
Yeah.
But I
Yeah. Yeah.
know one of the things probably probably close and near and dear to your heart is kind of outsourcing kind of tax services. So,
Yeah,
so
well,
let's
there
talk.
is. So yeah, you're absolutely right. I mean, there's so let me just speak to a slightly earlier point, which was around sort of the growth of new and that's slowing down. That said, there's been significant growth of new product coming out of existing managers, particularly the really big end of the market, like you were saying. I had a conversation with one of the largest global asset managers recently, last month, and they said they are so overwhelmed with new product that they can't keep up. And this was a conversation with someone, in the tax group. And so, speaking of outsourcing, they're saying we just need more help. We can't get enough people to kind of work with us, to assist with this. We can barely keep up with what's happening, and so
Yeah,
so they're looking to asset servicers to help them, right? Admins and others who can help them. And the admins are saying, well, we can't do this either. And how do we work with a third party? Let's take tax as one outsourcing example. It's slightly self-serving, being a tax guy by background, but let's take tax. We are having conversations with asset servicers saying we need to offer this because these asset managers are coming to us saying we want you to help us in building out that infrastructure to provide to our clients some kind of managed tax service. It's so important to their business. This, for an asset servicer, that's not their business. That's you know
right.
that's not core to their business. But it's really core to our business. I mean, that's what we do, and we can do well. And again, back to sort of one of the earlier points I was making about technology, we can use our technology platform to deliver something that provides workflow, both to the asset servicer, to their end clients, so they can see what's happening in the whole tax process. And it's particularly focused in the U.S. and again, PFIC statements and K1s and that kind of thing. So the admins are saying, will you pick that work up for us? And it's a line item cost to their end client. Will you pick that up for us? And so that's where we're seeing we're getting a lot of calls. We're getting a lot of questions about how do we help with that, and how do we drive that, for the asset servicer to also deliver tax, like they're also delivering valuation, like some of them are also starting to offer investor services and even fundraising. These are all, people are looking for one-stop shop,
Yep.
for this
Yep.
kind of stuff.
And we've seen that, right? We've helped many admins kind of bring in lots of bolt-on, I'll call it bolt-on services,
Right.
cyber,
Yeah,
IT,
cyber.
outsource CFO or CCO
Sure.
services. And I think tax is just and compliance are just very natural
Yeah.
um, parts of that offering, right? That an asset manager, if they can, doesn't want to buy eight things from eight vendors, right? And
Yeah.
right, and are you finding if on the outsourcing of tax,
Hmm.
um, uh, you're saying a lot of your focus is the actual asset servicer as the intermediary with the
It,
asset
it,
manager,
it often is. It often is. Maybe not at the really big end of the market, because they're saying just take this wholesale.
right?
BDO, just take this wholesale. But particularly for those asset servicers that have a huge swath of small to mid market size fund managers, PE and Hedge and whoever else, and they're saying this is just not something we have capacity to deal with. Can you help us with that?
Yeah,
And
yeah.
so rather than build it out themselves, or they're saying, hey, can you guys do that for us?
Yeah. So listen, as we're running out of time here a little bit, I
Yeah.
want to focus just on one or two more topics, but let's talk a little bit about your views on kind of global regulation. Like, obviously
Hmm.
at 23, there was a huge SEC agenda, right?
Yep. Hmm.
As big as that. What's kind of your view of at 24 about, some of the top topics under this umbrella of global regulation that impact your business?
It's overall, it's a continuation of the same thing. I think, when you look at the enforcement priorities for the SEC, for example, it's a big continuation of 23, and there's a big focus on cyber, for example, and what your cyber policies are and how you're dealing with that. I think every year they become much more savvy about how fund managers work within this environment, and so I think you're going to see an increase in enforcement under the current administration anyway.
Yeah. Yeah.
And so I would expect in the U.S. To only see increased regulation. I mean, you see what's happening on a few different areas already, and where the SEC is going and promulgating new rules. I think the same is true globally. Again, the FCA takes a slightly different approach, at least from an ethos perspective, in terms of how they approach the market. Is also increasingly focused on enforcement, of existing FCA regulation in the UK, and then ESMA, and Europe as well. There will be no let up anytime soon of regulation. I mean, look, along those lines, and sorry to drag you back to tax for a second, but there are also a couple tax things like the global minimum tax, and some of in some areas where they're looking for global coordination, not unlike in regulation, where they are trying to coordinate globally as well. But in tax too, there is, although I'm feeling less and less confident that we're going to see that, given U.S. politics right now pushing back against a global minimum tax. But
Right.
there is just no let up for fund managers when it comes to regulation or tax, and I think increased investment, increased outsourcing to partners, whether they're compliance consultants or tax providers. I think that will be the way of the future.
Yeah. Listen, it's a really interesting time, right? Like when you think about the 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 alternative markets, right? And just for U.S. SEC registered advisors,
Mm-hmm.
ballpark, about a third of the funds are still self-administered,
Right. I
and
didn't realize it
it's
was that high.
yeah, but it's starting to follow the trend, right? It was first
Yeah.
mutual funds, then hedge funds.
Right.
Now closed end are starting more and more to
Mm-hmm.
outsource. But I think that outsource has become um, changed a lot with COVID, right? So
Yep.
people
Mm-hmm.
who had different cultures who had built things are all of a sudden now the war on talent is a big challenge for them,
Right.
so I see more and more. I see outsourcing booming personally,
Mm-hmm.
whether it's tax, whether it be fund administration, whether it be all of those
Sure.
services we bolt on services we talked about. I've even seen. I'm interested quickly, and I'll throw you a
Yeah.
quick curveball, and then we'll wrap up. But I found it interesting recently that some of the larger uh, uh, accounting firms are investing in fund administration, right? So RSM, right?
Yeah.
RSM is a fund administrator. Eisner has one. EA
Right.
Rest,
Uh-huh.
PKF O'Connor has one, right?
Yep.
And I think what they're finding is their clients are saying to them, if you can do this work, even though there's no conflict with, say, tax or consulting, there is a conflict with
There's
assurance,
clear conflict with assurance
right?
there.
But they're
Mm-hmm.
saying like, well, this is a great opportunity for our tax and consulting clients for
Yeah,
us to.
look, it's an interesting thing. It's interesting. I'm
Yeah,
not sure if I don't think directionally that's where we're going to be going. But I guess for some firms it works well. But it's you can understand. I mean, it goes back to the earlier point of people wanting one stop shop, right? So the more service you can provide, um, you know, ostensibly the easier it should be. Uh, but it's really hard to compete against those large global admin shops. This is all they do, and so it's a really tough market. I mean, it's a tough market to begin with for anybody.
Right.
So, yeah, like I said, I'm not sure that's an area we'll be going into.
Right. It's interesting. Well, listen, I want to
Yeah,
thank you for spending time with us, and one, I want to thank you for making the time. Two, you guys, BDO, you've been a great client of Convergence. You've probably been a client for
long
close
time.
to 5 years now,
Yeah,
and I think our relationship just keeps getting stronger. So I want to thank you for the partnership. And our view is if what we do can help you more rapidly grow your business, then we're doing the right thing. So
no, it's
thank you.
great. Thanks, George. Appreciate you having me on, and and appreciate everything you guys do for us.